Welcome to Entrepods, the most cutting-edge podcast for entrepreneurs and investors. We answer the hottest question today. So now what? We are radically civilized with a focus on durable solutions that make the most positive impacts in your business, financial, personal, and community life. The world right now belongs to entrepreneurs. Today, we'll show you through our expert conversations that matter, the limitless opportunities you have right now to live the life of your dreams. The best version of you and your business starts now. Welcome to Entrepods.
Well, hello, Entrepod. So we've got a great guest coming to us from the beautiful, glorious city of Barcelona, Spain today. Yeah, we're scouring the globe to bring you all the coolest people. So today's guest is a fintech advisor and mentor, and he is now the director of an independent management consulting company. He was, elected or placed into the position by the International Youth Federation to the chair of Finance Commission back in 2018. So he really knows his stuff when it comes to fintech. On top of that, he is being passionate about financial services around the world. He's the founder and chief pencil officer of FinTech Review, which is an online media platform on everything about fintech. So we are very excited to have Tristan Palou today on the show. So Tristan, welcome to Entrepods.
Thanks very much for having me today.
Yeah, I'm very excited. So you've had a pretty interesting career because you also worked at corporate strategy for over 5 years for Virgin Money in the UK as well, too.
Yeah, exactly. It's a bit complicated, but I initially joined the UK subsidiary of an Australian bank called National Australia Bank, and my first job was to carve out the business, a UK business, and do an IPO of it, and became an independent bank. And in 2018, we acquired Virgin Money, and then became Virgin Money. But kind of went through several jobs and organizations without ever leaving my job. So it's an interesting development in my career.
I think that it's interesting too that you come from fintech, but you have a very entrepreneurial spirit. Most times I see a lot of people that are coming from fintech and they usually immediately just go to firms. They go corporate the whole way and have entire careers in corporate. Whereas you've been very entrepreneurial in the things that you've done. What made you take the leap from what was safe and I guess, well, nothing is safe. Like entrepreneurs know that nothing's safe, but there are traditional routes and then the non-traditional route. Where was your mindset in that? Are your parents entrepreneurs or?
Yeah, so as you said, I went corporate. I was in a safe job and well paid and all that. And at some point, you just realize that you want to. I guess it sounds cheesy, but the whole do something you love and you'll never work a day in your life. And the thing is, when you work for a corporate, there are a lot of stuff that are not about the actual job. It's about relationships and it's about politics. And I was a bit tired of it, and I wanted to build something myself. And if it goes well, it's all on me. If it goes bad, it's also all on me. But the whole I thought my brain could be used better in building something, and yeah, so I jumped and I thought I was about to turn 30, and I was like, the whole thing. Where do you see yourself in 5-10 years? And I thought I don't see myself doing that. At a more senior level. Some people they have great careers staying in corporate, but it just wasn't the vision I had for myself when I would grow up and grow old. So yeah, I decided to start a bunch of stuff, and I'm working on other things at the moment, and yeah, it's really good. I really love the entrepreneurial life and what it brings. The instability, it's challenging, but it's actually great.
Yeah, we love our entrepreneurs here at Entrepods for an obvious reason. So it's really interesting when I talk to people, their story and the different triggers it takes them to go from what they were doing to where they're at right now. So you were involved in a couple of like on the low key startups in fintech, helping to build them, right? I think you say that you're in stealth mode right now. But then the thing that you're doing that's not in stealth mode is FinTech Review. And so it's kind of a blog and it talks about what's happening in FinTech and it's pretty well fleshed out. So now that the whole world is trying to come out of this very unstable, crazy time, can you tell us for specifically for entrepreneurs, what are some trends that you're seeing that you think that we need to be aware of?
Yeah, so I mean, it's been, yeah, as you say, crazy year, and for fintech, it's been like a good year in the sense that a lot of business went online, which meant that online payments have absolutely boomed, and a number of of fintechs that are targeting infrastructure in terms of the way you can set up payments, the way you can set up bank accounts. So kind of the banking as a service, as it's called. And a number of these companies have emerged much stronger from the pandemic. Companies like Stripe or Checkout.com. So a number of these companies that just facilitate payments online. So it's a very strong trend, and it will continue. It's the same kind of stuff that you see with Klarna and buy now pay later, where it's becoming like a normal option. You go at checkout online, and you're like, okay, actually, do you want to split the payment in several chunks? And here you go. So this kind of the thing is, finance is becoming more and more embedded into the customer experience. So what's gonna happen is actually you're gonna see it less and less, which is the ultimate goal. Is that basically it has been the case for a very long time, but you never want a financial product. I mean, you don't care about a mortgage, you want to buy a house. You don't care about a personal loan, you want to buy a car. So I think you'll go towards much more like the journey where you go buy a car and oh well, it's already with a loan. Like you don't have to do things separately, where it adds friction into the shopping experience, whatever you're buying. And I think we'll see more and more of this embedded finance, embedded like banking into our lives.
How do you think that that is going to be for people who want to compete in instead of SaaS systems? Now we have BaaS systems, banking as a service. And so for anyone who wants to get into that, do you feel like that field's going to become more wide open? Because just even now, Stripe, PayPal, there are entire sectors of people that are, there are people right now today, they're waking up and Stripe has just put a hold on all their money, tens of thousands, $100,000, and they can't reach anyone. Their business closes. And then 6 months later, they just release it. So what are we going to do to combat that? Do you feel like there's going to now, because those things are happening, they are going to be able to get more competition in there for people who are able to take, I guess, the companies that I don't know, like I know that consulting firms, marketing companies, coaching companies, for some reason, these people get flagged or getting flagged for different reasons, and they just hold their money and they never tell them why. And then they just give them back, but you don't get back interest. There's no penalties for that. In some cases, the company tanks, and then 6 months later, you just get, all your money back. You're able to access it. So do you feel like there are going to be more rules and regulations to prevent that and more competition?
Yeah, I think, I mean, you were saying the influence of your parents and stuff. My dad always told me to have several accounts just to avoid this, like where you get frozen for some odd reason. And if you have several accounts, especially these days, it's quite easy with all the online stuff. So that's the thing I would advise first, is just try to like split around, like maybe two banks, and so you're making sure that it doesn't torpedo completely your business. But no, definitely, I think that there should be more rules around the time it takes for them to go through the whatever maybe it's just flagged for money laundering for whatever, which is maybe fair enough. I mean, banks need to do that. However, if it's the case, it needs to be quick. It can't be months. There have been several problems like this, the same in the UK, and banks or fintechs holding money for ages because they say, oh, something is wrong. So yeah, I think, like, as fintechs are becoming bigger, they're going to start to have the same kind of scrutiny that banks have, and which is going to be good, is that there will be more scrutiny and they will feel it, because I can tell you, when you work for a bank, a big bank, like when I was working for Digit Money, the regulator is asking you stuff like all day, like, yeah, literally they ask you stuff like several times a day. Okay, what is this, and can you tell us about that? And like, there is a constant dialogue, and this is because of the size you are. We had, back when I was there was 6.5 million customers, so they ask you things. They ask you how you're doing business, and fintechs are going to have the same thing. So regulators are going to ask them, okay, why are you holding funds for 6 months? What is this about? And they will change their processes. Like, this is coming when you have a certain scale, and maybe at that point in time, they're easy on them because they're still smallish. But when you get to a certain size, like, they're going to start being interested in what you're doing, and they're going to make sure that you're doing it right.
Okay. Yeah, I think that with any problems like that, when you see entire systemic breakdowns in the system, that where it comes, you're talking about months, you're putting people out of business, you're creating economic blight, you're pushing people who were, tax-paying wonderful citizens into homelessness, and all their staff into homelessness, and you're literally creating economic blight and disease. At one point, you're going to be held accountable for all of it. So I see it over here, and I hope that ethical entrepreneurs can step into where we have these systemic breakdowns with these massive mega institutions, to provide enough competition that they'll fix the systemic problems. That's my hope, anyway, because I see it happening more and more. And of course, you're over there in Barcelona, and we're here in the US. And like right now, there's something like 50 million people that have been waiting for months and months for their tax returns. These are people, like regular people who are owed money from the government, into the tune of, some of them, thousands of dollars if they have kids or businesses. And normally it doesn't take any more than 2 weeks. We're not talking about people who are audited or people that they have questions on. We're just talking about regular people. It's a massive crisis. And there's no one to talk to. Like, you call on the phone, not a single person answers you. We can't answer the phone. You have to go to a website, and they just say, we're still processing. And there's no answers. There's nothing to do about it. It's like become so big that it's not regulated. So I think that in the end, it'll be private industry that's going to come in and to be able to answer these serious problems and gaps, to prevent this from happening. So I'm excited about that. As far as other trends for businesses besides banking as a service, can you think of anything else that is cool, or some interesting trends you think we need to be aware of?
Yeah, I guess I'm gonna address the elephant in the room here, and there's a lot going on with Bitcoin and cryptocurrencies, and
Yeah.
I think it's interesting. I just think that a lot of people get the idea wrong, sense that they go all into Bitcoin, thinking that it's this shiny thing where it's gonna go up and I'm gonna become a millionaire because I invest 50 grand, and then they end up losing half of their savings. So I just feel people should, if they want to invest in cryptos, it's fine as part of a diversified strategy, and you're you're looking at your portfolio of investments and you're like, okay, I'll put a bit in crypto so it balances with the other stuff I have, rather than, I go all in because a guy on Twitter says that it's going to go to 200K. Because when I think, personal advice, but if someone tells you, oh, you need to buy this, just wonder why he's telling you this. And most of the time it's because they have a vested interest. They just bought and they want it to go up because it's good for. So I'm not saying it's a PR bit scheme, but it does look a bit like it sometimes. So just a bit wonder why people tell you that, and just diversify. But there are lots of activities going on, lots of money going into cryptocurrencies, especially Bitcoin, and I can understand like why people would do it, not as a mean of payments, but as a store of value. But yeah, I see lots of BS as well. So I'm looking at it carefully, and I keep an eye on it. I have a very tiny amount of it just for the kicks of looking how the platforms work. But yeah, it's obviously a big trend in financial services and in fintech. I see lots of other companies that are trying to democratize investment, like as a whole. So accessing new asset classes like that you couldn't before. Like for instance, venture capital used to be like you needed a lot of money to be able to invest in startups. Now you have crowdfunding where you can invest in startups from very little amount. So I'm very excited about like really democratization of personal finance and the way to like build a portfolio. Now you can really build a diversified portfolio with a little bit of money, whereas before you needed really a lot of money, you needed an advisor and stuff. So it's quite interesting, because I'm quite passionate about, for me, fintech needs to be like for the greater good, what you were saying, that it needs to change the way things are being done. And one way is to help people like with not a lot of money, but build wealth and build it over time. And there's a lot of financial education needed, obviously, like to tell people like what I'm saying, diversify, don't go all in, it's super risky. If something can go up by 100%, it can go down by 100%. That rule of thumb, So just be careful about how you build your portfolio. Some stuff are boring in terms of the ways they will appreciate. If they're boring, it means it's less likely to collapse, and you're less likely to lose half of your life savings.
Stay with us and we'll be right back after the break. The Entrepods team is excited to announce the new Bootstrap Bootcamp to answer all your questions about the how and when and push you to be the best version of yourself. Watch as your business becomes more profitable in the next 30 days with industry experts to help you along the way. We teach you powerful strategies that companies around the world implement that are refined for small business owners like yourself. Sign up today at entrepods.com/bootstrap-bootcamp.
Like I'm a huge fan of real estate investing, and I think that more people need to get into real estate. And so we talk about real estate. We have a lot of real estate investors because there's a million different ways you can invest in real estate, just like there's a million different ways you can invest in lots of different things. I too, I can't say I didn't go in and get Dogecoin. I did. I watch it. I got it. I look at it every now and then. Is it half of my life savings? No, but it was fun. That's one of those things. It was a losable amount. So on things that are highly risky, I think sometimes it's a little bit fun to have a losable amount on that. So one thing I wanted to talk to you about, because this is another big elephant in the room, because I get people that are like on both sides of the fence, but for Wall Street Bets and what's happening with AMC, have you been watching that with the stocks and the hedge funds with GameStop and AMC and Wall Street Bets and the hedge funds that are now going under, and they're holding. They're like, I don't care if I never see a penny out of it. I'm going to hold it just to do it. And they're holding like hard, which I'm sorry. I feel like putting on the face makeup and going, yeah, just hold on to it. I'm happy for him. But for you on the other side of fintech, what do you think about that? Because that actually showed incredible financial literacy, that people could do that. They didn't break the law in doing it. They were just noticing trends and they were playing the game. But it looks like, how the game is a little bit stacked against them. And I think that brought a lot of awareness to the stock market and how it's actually run than many other things. So what's your take? I'm very curious what your take is on it, if you were following it at all.
Yeah. I even wrote an article about it, because the best thing, the thing I really love to write about is dramas. So this was a good drama. It had everything, from the little guy trying to take on the hedge funds. I think it was quite interesting because, as you say, people started wondering what was going on, and they had a view on it. They were like, you know what? I don't think this business is dead. And the hedge funds were like, well, I think this business is dead. So they were shorting it, and then they got squeezed, because when you're shorting a company, basically, like, at some point you need to cover your shorts, and then they got squeezed, and the hedge fund actually had to close down because of the whole, like, Wall Street bets. So I mean, I was also quite happy, because it's people that are, by nature, when you're shorting a company, is that you're trying to destroy value, you're trying to kill it. So I'm not a big fan of it, I must say, and I think lots of people are not really a fan of it. It's fair, like, it's a strategy like another to make a bit of money, but it's not like, when you're buying a company, I believe in the company, I think it's going to grow. When you're shorting a company, I believe these guys are losers, and they're gonna it's gonna collapse. So it's very negative kind of thing. So I'm not a big fan of it, and I think it was great. It was quite interesting to see all these people piling in. It happened last year to a lesser extent, when Hertz went on collapse and people bought in, and you know what? In the end, they were right, because now the company is doing fine, and at that point, people thought, you know what, they're crazy, and they're gonna lose their money, and actually they didn't. So I think there's a bit of wisdom of the crowd here, and it can work sometimes, especially on stocks where there is not a lot of volume. And yeah, I guess it's just different point of views. And hedge funds saw that they were holding the truth, and these companies were doomed. And a bunch of people said, no, I don't believe it. And they fought, like, different point of views fighting. Sometimes you have this, but most of the times it's one hedge fund is believing in a company, the other one is not, so they're fighting over it, and eventually one is winning. This time around was super interesting, because it was a hedge fund, but a bunch of hedge funds, and on the other side, a bunch of people, like, bored at home and saying, you know what, GameStop is going to the moon, and AMC is going to the moon, and it's actually quite a nice trend. I mean, for me, if it's getting people to invest in companies, I really like it, because people should invest more, but invest in the long term, not, day trade, because day trading is just, you're going to lose. Like 90% of the people just lose money. So if you're telling me you're buying AMC because you believe in their business and it's a 10-year bet, yeah, go for it. Like, and if you can squeeze a few hedge funds into the process, yeah, great, do it.
Yeah, I kind of feel the same way, because I thought that the way the hedge funds do it, though, I don't feel is ethical, and I don't know why they're allowed to do it. So they can have a meeting and they just decide, and sometimes it's almost arbitrary, who to squeeze. And then they'll be like, okay, Bob, so we have you booked on the Oprah Winfrey Show or CNNBC talk, Daily Talk and these shows because you're the expert and they're going to ask you about trends. Be sure to run down AMC, which is what they did. So these hedge funds have their own people who go on as financial experts to these massive nationwide shows that everybody looks at on CNN and MSNBC and NBC and all these other networks. And they say, well, what do you think? This is our financial expert from someone and you're with this hedge fund. So they're not lying that they're not with the hedge fund, but most people won't sit there and go, wait a minute, is this the hedge fund that's going to short this company? So that they go on and they talk about trends. We love this company. We're really betting hard that AMC is going to go down, blah, blah, blah. So they're basically tipping off the fact that we're gunning for them and you're stupid to invest with them because we're this billion-dollar hedge fund. So anyone savvy will start to automatically do the same thing. So basically they're just gaming a system and they're advertising what they're going to do. So I love the fact that, in these poor companies, they're trying, they're just showing up to work every day, trying to do it. And I love the fact, especially with GameStop, it was gamers who love GameStop, who just were going through, like, oh, we have a pandemic, we have this, everything's going down. There's this election, there's all this stuff. And now you're going to take away our video games? Like, well, what? And then I love the fact that they became savvy. They started to research. They started to ask questions. They started, nobody needs to say, oh, well, the poors, they're just not financially literate. Well, no, that's not true. They are financially literate, but there are some cases where the system is rigged against you. And so we need regulations. We need to stop some of that behavior. You can't have million or plus a month marketing budgets that people are marketing against companies to tank them so they can make money on the end. That's so uneven as far as a playing field goes that I think that we need to do away with it. So I hope they talk more about that and doing that, because that's, when you're marketing, and it's slick marketing that they do, it's very smart, it's psychological. And in a little company just trying to make it out of maybe a tough time, they don't stand a chance against all of that. And hopefully we can change that and keep people employed, because it creates economic blight. It's not ethical. Anyway, that's my personal opinion, Entrepods. Anyway, if you've come in in the middle of this, we have been talking to Tristan Palou, and Tristan is a fintech, of course, expert, global expert. He's the chief pencil officer of FinTech Review. He was elected to be the chair of Finance Commission for the International Youth Federation. I mean, he really knows his stuff, and he's involved in a lot of big companies and some other startups. Anyway, so we're going to continue this, but we're getting kind of to the end of the show. What else can you tell us maybe about what you're doing right now, or ways people can continue to be savvy and look at different trends, especially our entrepreneurs? So where should they go? Because can they go to FinTech Review too, or no? I already know the answer.
Yeah, so I'm when I started this, I really wanted to bring everybody on board. So I go from, explaining basic concepts. So, what you should be doing in terms of personal finance, what is FinTech, what is this new trend, what is yesterday I released an article about why JP Morgan was buying a robo advisor called Nutmeg in the UK, and so explaining a bit about that. So I'm really trying to bring everybody on board because, as you say, I think everybody can. I really love people that are willing to learn, whatever is their background. You can have been to business school, or you can have done nothing, like no studies, whatever. As long as you're willing to learn, you can learn anything, right? You just need to take the time, and maybe it's going to take you a bit more time because you don't have the foundation, but you can learn everything. I mean, internet is great for that. You can spend hours on Wikipedia. You will be able to learn like a lot of stuff about finance and personal finance. So just read a bunch of stuff. I read a lot. I read literally, I think I read 2 hours a day at least, because I'm always keen on learning new stuff, and this is a continuous process. It's not you do a course or you go to school or whatever, and then that's it. You're set. No, you need to continue learning new skills. You're learning, personal finance. You need to continue learning. Oh, this new thing is coming up. Okay, can I try to understand how it works, how it fits into my own thing? So yeah, my advice is read a lot about things that are going on. Try to connect the dots. Do this as much as possible. So yeah, and in terms of the stuff I'm doing, so this week is the Mobile World Congress in Barcelona, one of the biggest tech conference. First time going back to like meeting lots of people. It's quite exciting, even though I've heard much smaller than it used to be. It's still like 10,000 people over a few days. So I'm meeting a lot of people there. Elon Musk was talking about Starlink earlier. It was quite interesting.
Oh, really? Because I've ordered it. I mean, I ordered Starlink and I'm on the list waiting to get it. So I've already put my little down payment on and I'm just waiting to get Starlink. I can't wait.
So yeah, he was talking about how it works and his vision, like how Starlink fits into all these projects, because the guy is starting a company every 2 days. But also very cool to meet people from all over. And yeah, so I'm building a new startup with a few people, and it's quite exciting as well. So I'm working on that. But yeah, I mean, you know what I always say is that if people have questions about fintech, they just talk to me. I love to talk to people. I talk way too much anyway, and I love to go to conferences and meet strangers and just chat about life and fintech and finance and investing. And yeah, you need to be curious in life, man. Curious about people, what they do, what their motivation in life, why they do what they do. And you learn things always. So yeah, that's my rambling about being curious and continuous learning is my number one advice.
Well, I love that. So we've been talking to Tristan Palou, and Tristan, you can go find him. You can talk to him if you go to fintechreview.net. That's FIN tech, TECH review.net, fintechreview.net. And you can reach out to Tristan. You can become a fan and you can learn a lot of information. And fintech, it doesn't have to be boring. It can be just as Tristan said, very connected and human-centric, because really fintech is driven by the human desire for a lot of different things, which I absolutely love. So guys, we're here at the end of the show. Tristan, I want to thank you for being here so much. And for everyone listening, all the links to meet Tristan and all of his information will be right here below the episode, so you can go and get it. And of course, you can find us on any podcast platform. You can go to Good Pods. You can go to Apple or Amazon or Alexa or Google, Spotify, Stitcher. We're on everything at Entrepods. Be sure to go ahead and my Alexa just turned on when I said that. That's funny. Anyway, so guys, she's just talking away. So, it's kind of funny. I got to say, we used to say, well, don't say anything on the telephone because you never know, maybe the CIA is listening. And now it's like, hey, CIA, how do I bake a cake? We don't even care anymore. It's just everywhere. They're listening to us. And that is totally you would not believe how far away that is. It's creepy. Anyway, so thank you for listening to Entrepods. Thank you for being here. Give us a 5-star review. That's how we keep on getting the coolest people around the world like Tristan here. And don't forget to like, comment, and share. Have a great, wonderful week. And don't forget to go to fintechreview.net. Thanks, guys. Bye-bye.
Thank you for listening, and please go give us a 5-star rating on your preferred listening platform if you enjoyed the show. This helps us reach more listeners like you and keep booking amazing guests. If you'd like to join our growing Entrepods community, want our social media links to like or share, or inquire about one-on-one strategy calls with our host Jennifer, please visit entrepods.com. See you next time, and here's to you and your best life imaginable.